What if I told you that just 0.1 Bitcoin could change the direction of your financial life? Most people wouldn't believe it. They think Bitcoin already happened, that only the early buyers won. Others repeat the same mistake over and over. It's not worth investing unless I can buy a whole Bitcoin. And that mindset is exactly what keeps them dependent on the system, on the bank, on the boss, on the government. Today, I'm going to show you why even a tiny fraction, just 0.1 BTC, can be the difference between being part of the change or watching from the sidelines while others build freedom and you stay stuck. This video is split into 4 parts. If you understand them, you'll never look at money the same way again. And you might realize you don't need to be a millionaire to stop living like a financial prisoner. Before we start, subscribe and drop a like if you're committed to going after your 0.1 BTC. Part 1. Satoshis. Before you think about how much you can make with Bitcoin, you need to understand what you're actually buying, and I'll make it simple. 1 Bitcoin isn't a single, solid bar of digital gold. It's a divisible unit made up of 100,000 Satoshis. The same way $1 is 100 cents, 1 BTC is 100 million sats. That changes everything, because while many people complain it's impossible to own a whole Bitcoin, the truth is you can start with a few dollars. Let's put it in perspective. Prices move all the time, but the key idea doesn't. If 1 BTC were priced at, say, $100,000, then $10 would buy you 10,000 Satoshis, $100 would buy 100,000 sats, and $10,000 would be 10,000 sats, which equals 0.1 BTC. The numbers shift with price, but the logic never changes. You can accumulate sats in any amount. And here's the mental switch that separates short-term gamblers from long-term builders. Stop thinking in Bitcoin, start thinking in Satoshis. Don't say, I only have 0.01 BTC. Say, I just bought 100,000 sats. That difference in language reshapes your strategy, because every Satoshi is a seed. While others wait to have enough before they start, people who understand this simply accumulate a little at a time, because what matters most isn't how much you buy today, it's when you decide to begin. Part 2. The limit. Now that you know what a Satoshi is, you need to understand why each sat matters. The reason is simple. Bitcoin is the first truly scarce digital asset. In traditional money, governments can print as much as they want. Crisis, print. Elections, print. Need time, print. And every time they print, they quietly drain value from savers. That's inflation, a silent tax on your work, your time, and your purchasing power. Bitcoin does the opposite. It has a rule written into its code. There will never be more than 21,000 Bitcoins. Not one, more. No politician, no central bank, no corporation can change that. Split those 21 million into chunks of 0.1 BTC, and the maximum possible number of those chunks is 210 million. That's it. Now think about this. There are 8+ billion people on Earth. If the entire Bitcoin supply were evenly divided into 0.1 BTC pieces, only about 2.6% of humanity could hold one. And reality is far tighter. Millions of coins are lost forever, some wallets are inactive, and a handful of individuals, companies, and funds hold huge amounts. The practical result, far less than 1% of people will ever be able to own 0.1 BTC. Do you see what that means? Owning 0.1 Bitcoin would put you among a very small group, holding a share of the scarcer than gold monetary asset on the planet. Many think Bitcoin is just an investment. In truth, it's a reservoir of absolute scarcity. And when something is limited and widely desired, its price ceiling becomes a moving target, often upward over long horizons. That's why stacking even a fraction can be a smart strategy, because when global demand accelerates, and history suggests it does in waves, it's always too late to regret not starting earlier. Look around, it's not just internet geeks anymore. Companies, investment funds, and even governments are buying and holding Bitcoin like digital gold. And they're doing it for one reason. They know the supply can't be expanded. With every year, the window narrows a little more. While you're debating whether to buy $20 or $50 of sats, someone else is securing a position in an asset that no one can reproduce. That's the meaning of the 21 million cap, a system where human effort can't be inflated away. Whoever understands this one rule is already ahead. Part 3. Value. So far, you've seen that Bitcoin is divisible and limited. But here's the most important part. Why does it have real value? This is where most people get confused because we grew up inside a story. The story that government money is safe. But look closely. For decades, we were told that saving in national currencies builds a future. Our parents put money in a bank, hoping to live off those savings someday. But fiat money wasn't engineered to preserve value. It was engineered to be spent and slowly lose value over time. Inflation isn't an accident. It's the mechanism that lets governments manage short-term pain without immediate backlash. Your purchasing power is shaved away a little at a time, while you're told prices are just going up. But prices don't simply go up. Your unit goes down. This isn't theory. Look at any long chart of purchasing power versus real assets and energy. Over time, national currencies lose ground. It's the same pattern across countries and decades. Print, devalue, punish the saver. And what do all those currencies share? They depend on decisions from politicians and central banks. If your money depends on someone else's decision, it's not fully yours. In 1971, the dollar was severed from gold. From that moment, global money became debt-based promises. Governments no longer needed gold to issue currency, only credibility. And promises tend to break when pressure rises. If Bitcoin had existed back then, no government could have confiscated other nations' reserves the way gold was seized or frozen. Because Bitcoin is secured by private keys that live in hardware or even in your memory. Bitcoin isn't just digital, it's incorruptible when used properly. It doesn't need permission. It doesn't care about borders. It doesn't require banks. It can't be counterfeited. And its code ensures nobody can create more. That's why it's becoming the store of value of the 21st century. Because unlike any fiat currency, it protects the value of your time. When you work, you trade hours of your life for money, as Smith. If that money bleeds purchasing power each year, you're losing your life slowly without noticing. Bitcoin lets you do the opposite. Freeze that value in a network no one can manipulate. And the world is catching on. Large companies and funds have added BTC to their balance sheets as a long-term hedge. Some governments hold reserves, and millions of ordinary people are shifting from saving in fiat to saving in sats. Over a little more than a decade, Bitcoin climbed into the top tier of global assets by market value, faster than almost anything in modern financial history. Analysts will argue about future prices, some wildly optimistic, others deeply skeptical. But the point isn't to predict an exact number. The point is the principle. When something is scarce, useful, and desired, its value tends, over meaningful timeframes, to move up and to the right. Bitcoin doesn't promise to make you rich quickly. It promises something more powerful, that the fruit of your work doesn't have to leak value just because the system demands it. In a world where everything gets diluted, simply not being diluted is a new form of wealth. If this is changing how you think about money, subscribe now, because what comes next separates those who understand from those who show up late. Part 4. The supply shock. You know what a Satoshi is, why Bitcoin is limited, and why it holds value. Now we need to talk about what happens as the world wakes up, because that moment has already begun, and it's a supply shock. Think about it. Every 4 years, the number of new Bitcoins created per block is cut in half. Miners receive a smaller reward each cycle, and that number keeps dropping by design. That means less new supply enters the market over time, exactly when more people, companies, and even governments want to buy. The equation is simple: few sellers, many buyers. The result tends to be upward pressure on price. It's not a theory, it's what we've seen in different ways across past cycles. As the reward shrinks, scarcity becomes more visible. and the clash between rising demand and fixed supply gets more intense. Picture a near future. Banks, funds, and nations treat Bitcoin as strategic reserves, while millions of individuals try to buy something, anything, just to avoid being left out. Most will arrive late, as usual. And you, this Mpatsari, if you manage to hold 0.1 BTC, 10,000 Satoshis, you won't just own something valuable. You'll hold a privileged position in a system that doesn't rely on anyone's permission. Today, that fraction might be worth what seems like an ordinary sum, but you're not simply buying a price. You're buying a slice of absolute scarcity that the vast majority of the world will never own. An asset that doesn't need banks, can't be printed, and grows scarcer every day. This is the inflection point. Every new buyer removes coins from the open market. Every sat you stack is one sat that won't be available to the next person. When global demand collides with fixed issuance, the world splits into two kinds of people: those who own BTC and those who wish they had. It doesn't matter whether you buy $10 or $100 today. What matters is that you start. Time doesn't refill. Every day you wait, the future price drifts a little farther away. The supply shock has already begun. And when everyone tries to get in at once, only the ones who acted early will say they understood in time. Years from now, people will tell you that you got lucky, that you bought at the right moment, that fate smiled on you. But you'll know the truth. It wasn't luck. It was vision. While most were distracted by hype, empty promises, or worthless coins, you chose to learn. You understood that freedom isn't begged for, it's built. And that every Satoshi you stack today is a quiet declaration of independence. Bitcoin isn't just another asset, it's a tool of resilience. A system that lets you store the value of your time without asking anyone's permission. 0.1 BTC won't change the world, but it can change yours and your family's. And when it does, don't call it luck, call it patience, discipline, and understanding before the crowd. Time is moving, the window is narrowing, and history doesn't wait. Start with what you have. Learn, accumulate, protect. Because the people preparing today are the ones who will live freer tomorrow. If this video opened your eyes, subscribe, leave a like, and watch the next episode to keep going. The future is already here. The only question is, will you be in or out?